Good afternoon, everybody from the Calista Sourcing Club community. Welcome to this eighth, interview of our second series of interviews. And I'm very glad to have our second lady today in the name of Maha Daoudi. Hi, Maha. Welcome.
Hello. Thanks for having me.
Well, you are a board member, friend, and client of Calista. We must be in full disclosure mode. But we invited you today because you have a fascinating background, and we spent together 10-15 minutes where we'd like to cover a few points about your background and how you think as an investor. And in particular, I want to start by asking you, you are a trader turned entrepreneur and investor. How did this journey develop for you to get to where you are?
Well, I think first of all it's probably very important to mention that I've been a trader, but I've been a physical trader. So actually I started my career in the mines underground. I was also managing a very large team, and I was also the architect of some strategic alliances. So I'm a very hands-on, let's say, person, and I like palpable, or let's say tangible businesses. So I think this statement is probably important because it will also guide a bit the rest of the conversation. And yeah, so a few years ago I decided to retire from the commodities industry. I was a shareholder in a large company, and then I sold my shares, and of course I became naturally an investor. I had to become an investor. So it was a very interesting journey so far because it's somehow a discovery for me. But what I did, and probably all the investors will do that to start with, you look at the different asset classes out there, and you make an opinion. So of course I looked at equities, but I have an issue with equities because I personally think it's the equity market nowadays is overvalued, and when a company gets to the IPO stage, it's already, in my opinion, overvalued today because there is a lot of liquidity in these markets. And I looked at fixed income as well, and I mean it's very, very. I mean the yield currently in these asset classes is, so to say, I mean, I wouldn't even say not high, it's very little. Then of course I looked at real estate, which certainly did speak to myself because especially on the physical part, so I'm involved in some real estate investments, but like projects of buildings that I am monitoring myself. Then I've looked at, of course, I always look at commodities. I mean, this is my background, and I mean, I have a very also a clear view on that market. I think nowadays most of the commodities are at a price level which is above break-even production price. I don't believe in a super cycle because one of the big components is no longer there. If we look in 2005, the super cycle we've seen at that time was led by China and by speculative buying in China. And China today is regulated. This won't happen again. But I'm very interested about commodities that plays a major role in the let's say decarbonization transition, and this I'm looking at closely. And I looked at the so-called alternative. And not only that, also what I was interested is to see also asset classes that are decorrelated from the economical cycle. So I of course looked at art and music, and I'm involved in those businesses. And I looked at so you have also what they call structured products, but this I didn't even look into because I like things I understand, and I like simple things.
You said real life and tangible.
Exactly. So this I wouldn't even approach it. And then I got to know about private equity and the PE field, which of course comes at a much more interesting potential yield, but of course higher risk as well. But I mean, I come in the trading, if there is one thing we do, it's monitoring risk. So I felt pretty comfortable to go further in that direction. And I really liked this field also because first of all, it's hand-on. You were talking real business, real economy. And
so you don't compare equities in the listed markets to private equity?
Well, for me, it's very. I mean, they are comparable in my opinion, only in one aspect. They both offer a wide possibility in terms of geographics and in terms of thematics. So, in that sense, yes, they both offer that. But I think they are very different in the sense that, in my opinion, you can get access to fair value when you look at private equity. I think when you look at equity, you're already overpaying
it's
for
very interesting.
asset. Now, this is my opinion, and then I got extremely interested about it because, as I was saying before, I'm a very hands-on person. I like tangible businesses. I like to understand also the businesses, and also I am with my career. If there is something I can say is that success in business is about humans, and it's about
I like that
resources.
That's true.
And what I really like also in the private equity field is because you really have the chance to be able to interact with the people who are carrying the project, who are managing them. I mean, when you buy shares, at the end of the day, yes, you can read whatever you want in Financial Times, but you don't really get to meet the CEOs or...
I think it leads me to my next question. Fascinating. So you're now a private equity investor, and it's fantastic that as a woman also you're in there, but how do you select a strategy versus another? Because as in everything, you said geography and sectors are varied. Do you decide based on that? Do you decide on what are your criteria when you look at projects or opportunities?
So I had to go, so the first, I will call it that way. The first layer for me was to define the level of risk I wanted to have and the ponderation of my different investments in terms of risk appetite. So of course I have a portion of the strategy that is more let's say preservation strategy and another part that is more growth related, and then that's of course the first layer. And then then thereafter inside the second important component for me was really to try and select things which, as I was saying before, were tangible to me and concrete and really, let's say...
you can identify too, perhaps.
Exactly. And then after, it's a lot about... then after you have to select indeed geographies and thematics, but this is a lot, I would say, about conviction, and you have to develop a conviction, and in order to be able to develop a conviction you have to inform yourself, to try to get the information, read, etc. And then it's a lot about intuition, and this is of course is reflected in your experience, what you resonates with
you said it's about people, so it's
well,
definitely. So would you invest in something where you didn't meet the team? Because you said
I don't think I would.
Have you done that? No. Okay, that's interesting because in the days of Corona, there's been a lot of investments made on the basis of virtual interaction, but you're a tangible, real life person.
Yeah.
Okay.
And it's very interesting because I have a very, very small position in crypto. Because I think you cannot...
The C word.
So it's extremely marginal, but I think when something happens in this world, you have to be there and touch it. But I would say that 90% of my position is linked to a value where there is someone I know who is who knows the business.
Even in
so that I would say, that even in crypto, I need that human factor and that real business factor. Yeah.
So that means you wouldn't invest in someone you haven't met or felt good with, and something you understand, or how much do you push the understanding level?
I am a very simple person, so I need simple things that I can understand. I am a very rational, logical person in that sense, so I need to be able to understand. Then I have to be convinced. So to be convinced, it's one layer beyond understanding. It's really to get knowledge and to be able to talk to people who have the expertise, and then you develop a conviction. And then there is the intuition part. And on the intuition part, also the conviction is about the human people, the people involved in it.
Oh, fantastic. So you have a lot to share. I think we're very proud to have you for our Calista community, and you're still very young, so I'm sure as a PE investor you have another 20 years to go at least. But let's think let's think potentially of just the yet younger generation of entrepreneurs. Let's say you're talking to someone who's in their 30s, who had a liquidity event and now is thinking of getting into PE. What advice would you give this younger version of yourself, or just a younger person in general?
I mean, first of all, and this is not only valid for younger people, because we still have maybe older people who are investing. So I think to start with, in my opinion, PE is a must. It's not an exception. I don't think any investor in this world could really have a strategy without being involved in PE. I think PE is a must. Now, I think it's very, very important to approach it not on an opportunistic way. I think it can be very dangerous to go after PE on an opportunistic approach.
Which would be what? Like a friend calls you and says invest in
Exactly.
this,
A friend calls you and tell you, oh, there is this, and you say, oh, I like this thematic, and you just go for it. And this is really interesting because somehow it reminds me also of my experience in the commodities. You know, these are PE, and I think it's very similar to commodity in that sense, are markets that are not very well informed in the public space. It takes experience, it takes expertise, it takes network, it takes really...
And you wouldn't advise someone, Mr. and Mrs. Mom from the street, to invest in PE overnight? Because there are a lot of regulatory hurdles anyway to do so.
Yeah, I mean, I would definitely advise any investor out there to have a look at PE, but I would not advise them to go gung-ho in PE, as I said before, opportunistically. I know some people and sometimes some former colleagues, they went into PE in a very opportunistic way because they had the cousin of the brother of the coming to them and saying that this project is really and I think that's the wrong approach. I think it's very important to go into PE, but on a very structured way. But
what is structured in your case?
I think structured is to be able to have access to the expertise where it is. And I've been personally extremely blessed because I had the chance to get to know about Calista, and I know you.
Yes, of course.
And I feel really blessed because, I mean, it's been very interesting for me in that, I mean, being part of Calista has definitely been, for me, very instrumental in deploying the strategy, because I don't think it's something I would have been capable of doing on my own. You have to have the good advice. You have to get the expertise. And you can't read about PE properly, you know, in the public space.
I think what strikes me in what you say, you're a very sophisticated person. You are an investor in many degrees, but still, as a professional person, you still believe in the value of having the right experts next to you to go for it. Although in the end, you make the decision and you then decide for yourself. I think it's important advice because we meet a lot of younger investors from the tech world who arrive with a lot of money overnight and then probably are tempted to go, as you say, all gung-ho into it. But I'm sure they can also call you for advice because now you've been in the journey.
I'm totally disposed to talk about it and share my experience. And I think it would be dangerous to go in a way, you know, opportunistically.
Well, we should invite you back in a couple of years and see where you got to, in your journey. But I'm now going to ask the politically incorrect question, which is the topic we always have together. But you are a young talent lady, and I cannot let you go before asking you, in a male-dominated industry, what kind of message would you want to give to young PE talent who wants to embark in this career? And there'll be, I hope, a lot of young ladies watching this video, and they'll look at you as a role model. Yes, probably more ladies, but perhaps you don't want, and you say, no, I want to give advice to men.
No, I mean, I think
you're a lady, and people will see that first, whether you like it or not.
No, I think it's very, and I have definitely a message to give that.
Great.
And I mean, I've been, you know, interacting, meeting some amazing, very, very talented women, and I think probably if I had to give a message is be self-confident. Self-confidence is key to the game. I mean, I think us women are very, very demanding with ourselves, and I think probably if I had to say something is that be bold, be ambitious, go for it, and you should not set yourself boundaries. And I think women probably needs to work on this, because if you look out there, even the most talented ones,
and you think
are still
less than men, less ambitious, less bold,
men do not ask themselves that many questions.
You should ask the men watching the video.
I don't think so. I mean, and I've been interacting with men, and I've been interacting with women as well, and mostly and more with men than with women. For a man, a man will never set boundaries, you know, say no. And it's really interesting because once again, I would like to cite a quote that I really, really like. It's from Basquiat, the painter, and he said, "It's not who you are that holds you back; it's who you think you're not."
Oh, cool!
And I think ladies out there do not realize their potential.
It's not
who you are that holds you back; it's who you think you're not. And this is probably the big message I have to pass to all this.
Is that because you like Jean-Michel Basquiat as well and his art?
Well,
it comes from a man.
I like him. I like his art. It comes from a man, yeah. But I'm citing it because I think this quote is very, very important, and it resonates so much with myself when I think about the success of women in these industries. I mean, the PE, but I mean, commodity industry was the same story. And I think everything is possible if you don't set yourself boundaries. So just be bold, be ambitious, go for it.
I hope they listen to you.
Confidence is key of the game.
Because you know that less than 5% of senior PE investors are actually women, which is a disaster. And perhaps just with the change of mindset and removing the boundaries, they'll get there like you did in your field.
I think this will change. I do think so. And it will be very interesting to see where we stand in 10 years from now. But I mean, I'm not going to go down the road of looking at statistics, because there are many statistics out there that are showing that from a performance point of view, the companies where women are represented are performing better, etc. But I mean,
That's diversity.
You can get this information on the public space, but what I think personally, from my experience and from meeting so many really amazing and talented women, is it's all about self-confidence. And not being too...
we'll send them to you to coach them in this way. Oh, wonderful. Thank you, Maha. Pleasure. It's the beginning of the journey. Welcome in the Calista community, and I'm sure there'll be a lot of reactions to this interview, but thank you so much.
Thank you for the invitation. Thanks for having me, and
I'm sure we'll
all
see
the
you
best
back.
of success.
Thank you so much. Thank you.